You're doing fine. I hope you're doing wonderful. This is a brief for the DXY USD. I'm going to be discussing the daily time frame and the weekly time frame. I'm going to be discussing the Elliott wave and the conventional technical analysis. Let's start with what I see here. First, I see very obvious classic pattern, reversal pattern as a it's not a saucer, it's a broadening bottom. It's something good is going on here. You could call it a saucer. Saucer is usually a longer time, but there is a reversal going on as far as a pattern is concerned. You could call it complex, uneven, inverted head and shoulder, left shoulder, right shoulder, and head. And you can see how uneven it is. You could plot this downtrend line from here to here, and this is the breakout point, and you could do the measure move. So, quasi saucer, broadening bottom, inverted head and shoulder, uneven one. No doubt about that reversal pattern is going on now. In addition to that, we have this breakout of this bullish wedge. So we could eyeball the chart and see so many reversal patterns. So let's discuss Elliott wave. Okay, Elliott wave. What I have here is a 5 wave down. ABC became 1, 1, 2, 3, 4, 5, 1, 3, 3, 5, extended flat C, so we call this 1, and we have a beautiful second wave concluded here with measured moves, so many measured moves. The last one of them is 2 from this high to this low. So this is according to my own count. This is definitely 2, and why would I call it 2? Because the sentiment was so bearish at this place. We have extreme positive divergence in many indicators, and it was obvious to me. It was obvious to me here in the conclusion of fifth wave, the last one with so many positive divergences. So I could assume this is the second big 2 is concluded here. And we have 1, 2 now, smaller ones. And we going to go through a third of 3, minute 3. And the registration will be at 9063. And after we register the minute third wave, we can measure the wave by using this number. So this is 127. If third of 3 is small, it's going to conclude at 9083. If it's 138, it's 9091. 150, it's 9105. 162, which is very likely, it's 9110. We could go all the way, and I wouldn't be amazed, to 62 at 9188, which might be a price memory too. 9188 would be here. So it would be this busy price memory right here. So you could conclude that the minute third, then you go to the fourth wave. So this is according to Elliott wave. So I discussed that with the Fibonacci extension of this little minute 3. Let's talk about what significantly happened last time is when the price action, the RSI for the price action went over 50. And you can see with this chart, this is an extremely amazing, beautiful signal. And most of the times you peak one over 50, then you go back and you have another price expansion to the upside caused by this this indicator going over 50. It happened here. It happened many places. It happened here. And you can see it. Seeing is believing. It happened here. So you can see it. You want your own time. First peak, then boom. First peak, then boom. We have first peak here. Then we may have boom. And you can see the broadening bottom right here. The saucer formation, even with the RSI. And I tweeted today, see this RSI made a high here and a high here. This suggests a higher high than this one, which indicates a minute third of 3 is imminent. Okay, so this is the RSI. Let's discuss the Bollinger Band I always talk about. So now we have what I call the pipe formation, which is extremely important when you have a significant move. Before you have that move, you have that pipe formation before the start of the move. So you have the envelope. It's like a price envelope. The band right here get tightened, then it changes direction. It happens all the time. You could check it on your own time. So when I see a pipe formation, I know there will be a change of direction to the upside or downside. So my bias was to the upside here because of a bullish MACD. It's been bullish for some time, since that day, I guess. So I always trade with the direction of the MACD. In this case, with this chart here, the RSI. But nevertheless, the MACD is always a good indicator to tell you where the price action might go. Good deal. So the Bollinger Band is giving me an indication of change of direction to the upside. Good. So I discussed the RSI, and it's significant over 50, and the Bollinger Band formation. Let's see another thing. Now we have more places where the sellers can gather. First, I discussed this in the tweets, how 100% of the time, for very long times, for the last 2 or 3 years, you have a MACD. Let's talk about bullishly now. You have a bullish MACD, then you wait for a couple of days, then you have a bullish crossover between the 10 and the 20. This is the 10 and this is the 20. So bullish crossover always causes a price expansion to the upside with at least 1% in the past. So this indicated to me that a price expansion to the upside was imminent, and it happened. Now we have the 50-day moving average, and it's pointing down. So you might have a resistance here, but that does not mean the conclusion of that supposedly third wave. Maybe that resistance would take place 7-8 hours at that day. Then it goes back up, or it concludes the minute 3, which I really doubt, but anything is possible. So we discussed this bullish crossover and this possible place where the sellers gather. Let's look at the weekly time frame, which is extremely important as well. This is the Fibonacci fan lines, and you can see we are in a significant breakout of this downtrend line. 3 downtrend lines using Fibonacci numbers. And the first time it peaked was here, and this is the second time. This second time is on its favor now, bullishly hooking up RSI yet. It's not over 50 in the weekly time frame. It would be really helpful if it gets over 50 for the bulls. And the MACD now is still not in a bullish mode in the weekly time frame, but it's extremely close. If we keep this pace, and maybe next week we will have a bullish MACD. In conclusion, my bullishness for the dollar, it's not because I want to be bullish. It's technically based on conventional technical analysis, based on Elliott wave. And please, I forgot to tell you this at the beginning, please like if you like, subscribe and share. If you do that, you encourage me to upload more videos. And please do remember that disco is forever.